Hello to everybody today. Don't forget to put your city and state in the chat. Tawana, I'm going to let you talk for a minute as I get my social media and everything set up. Okay, I'm going to go on mute.
Awesome. Very good. Very good. Hello to everyone. It has been quite a few weeks for me, so I am happy to be back. Thank you to Cherie for holding things down. And thank you for you guys for continuously showing her love in my absence. So I appreciate it. We had some really good sessions while I was gone. I have watched each and every one of them because I am also a student and a fan of the 10K project. And so you can't keep me away even when I'm supposed to be away. So I hope you guys enjoyed everything that Cherie did. You know, the session with Mike again, the appliance guy, like that session was another good session with Mike. Man, I hope so many of you have sent that or shared that session. I know I've shared it with 3 different people who may be interested in it. And so I hope you guys are sharing that session as well to get your loved ones who might be handy, into that appliance class that Mike is holding to be able to earn some really good side gig money, right? That's that
Or
side gig
main
money
money.
that you might leave. Yeah, you might leave your regular job for that one once you get the hang of it. But that was a really awesome program he's got going there. And then
And it's only $200
with
for
the
people to
supplement,
take
yeah.
with the supplement for people to take the weekend course. So it's a 2-day course. You could take it online or you could go live in North Carolina in order to take it live with him. And he's not the type of person to leave you like hanging once you're done with the class either. He wants to see as many Black people win as possible. So yeah, I actually, in YouTube today, I saw that a woman asked if she could do the class.
Absolutely.
Yes, women can do this class.
Absolutely.
I specifically asked him, what did it take to do this? And he said, as long as you could lay on the floor and get up 3 times. He didn't say anything about lifting up weight limits and any of that. So, yes,
I have
ladies.
had many appliance repair guys come to my house and they ain't lift none. None of them ain't lift nothing. So they
usually you're sliding stuff over, but I haven't seen an appliance repair person really have to lift too much of anything myself. Yeah. Or if you do, you could get the dollies or
you can
something.
Get the power dolly, even if you needed to. Like if somebody came and had to get behind my refrigerator, they'd be in trouble because it just fits. Like, so you got to kind of shimmy it out. But that's the exception, not the rule, I'm sure.
Yeah. So we have in the chat, we've got St. Louis in the house. We've got Killeen, Texas. We've got Queens. We've got New Jersey, Kansas City, Atlanta in the house. We have a few other people saying hello as well. We also have a couple of people in YouTube. Don't forget to like and thumbs up the video. So here's the 411. I sent the email to confirm with our guest. I did not get a confirmation back like I usually do, but he has the link. If he shows up, great. If not, I'm going to toss it over to Tawana if Eric comes. If not, then it's going to be another chit chat with Tawana and Cherie. We've got a couple of new things to talk about. What I'd like to do, Tawana, is at least show everybody some of the upcoming events that we have coming up and just introduce everybody to us at the 10K project and what we are doing. And
very good.
Hold on a second. There we go. I'm still working on my presentation a little bit, but I do want to let everyone know, number one, the Bet on Black pitches are back, starting tomorrow night at 8 p.m. Eastern time. We shouldn't have another break for a while, but we did take those 2 weeks off so that Tawana could have her celebration and Cherie could have a rest. But we are back. July, we have so much content coming out, and we're going to start pumping out the content a little bit more as well in all areas of wealth building and income generation. So tomorrow night, I found this woman on LinkedIn, and she has a program, free 99. Free 99 means it doesn't cost anything to participate. And what it is a program where you are able to learn how to do different things within tech. And they're also a job program as well. So they set you up in order to get your first job in tech. So if you're looking to make a move, y'all know my robots are coming. One day during like this session, we're going to do like a full session on the robots coming, right? If you are an unskilled laborer, please, please consider getting a skill. So tomorrow night, you could come, just take a look at her program. It's called launchcoders.org, I think is the name of it, but it's all about landing your dream job in tech. We also have, again, tomorrow night, the Bet on Black pitch. On next Monday, we have our very own 10K economist, Dr. Cherie, coming to give us the economic report, as well as Andrew from Wealth Stack coming to talk about wealth stacking, and that's open to everybody. Next Tuesday, we have a gentleman, Brian, who is coming to talk about how you can make money as a motivational speaker. Some of you have the gift of gab. Some of you are motivating your kids all the time, your parents, your coworkers. Why not get paid a few dollars for it? Not to motivate them, but to motivate the world. So we have them, have him coming. That is a members only event, so you can join if you want to see that. Friday, the 22nd, we have Kim coming back to talk about trademarks. If you want to protect your brand name, you want to come to that or listen to the replays. I'll make sure to send the replays out as well. To
and
everybody.
Kim is awesome. She helped us get
awesome.
our trademarks, all of our trademarks.
Yes.
So we have 4 out of 5 of the trademarks that we applied for. We have been granted them. So, you know, if you hear anybody else using the 10K project, tell them to cut it out. If you hear anybody else using Bet on Black pitch, tell them to really cut it out because those are ours. The marks
home of the
well
everyday VC.
Home of the everyday VC is our other one. We've got one that's still kind of like limbo. It's one of my biggest headaches, trying to figure out how to make this one work and how to show the trademark office why this is being used the way it's used. So I'm gonna be honest, that one might not make it. But 4 out of 5 is not bad. 4 out of 5 is not bad. But Kim has been awesome. She is not an attorney, although she has an attorney working with her. But when I tell you she knows this trademark industry forward and backwards, I'm telling you. And she learned it all on her own. You know, we talk about getting a skill, right? Skilling up. She learned it on her own because she had a trademark. I think, you know, she'll tell her story, but she had a trademark that someone took from her early in her career. And then she learned the rules so that would never happen again. And now she's helping other people acquire theirs successfully. I wish we should print ours out and put them somewhere so people can see them. Like, we should brag on our trademarks a little bit more.
Yeah, we should. I'll figure out how we can do that.
How can we do that virtually?
So we'll be able to do it virtually, I think. On Monday, so first of all, hi, Eric. I didn't mean to ignore you. Monday, July 25th, many people may not have ever heard of somebody called a futurist. A futurist is actually somebody who predicts the future, but not like Miss Cleo. They actually look at the way that the world is going to be in the next 10 years, 20 years, 30 years. They make predictions. Neil deGrasse Tyson, isn't that his name? Is like a very well-known futurist. But these two gentlemen are coming. They are Black futurists, and I think you're going to like it. They're going to talk a lot about what the future is going to look like as a people, as Black investors, as Black people who are working in corporate America. They're going to be able to give us information that we hopefully will be able to apply to our wealth building journey. So This is our first time having anything like this before, but I think it'll be really cool. And then on Tuesday, July 26th at 6 p.m., how to make six figures in the trades. This will be open to guests. There are multiple reasons, but the big one is, especially for our young men, if you have any young man in your life that needs this information, we did not want costs to be the reason why they could not get this information. So at least they can get a really good blue collar skill and be able to work in the trades. So between appliance repair and this gentleman, he is a master electrician. There are programs that are available that are either free or very low cost. They are really trying to get Black people, but especially Black men, into these positions. There are a lot of senior Black men that are really trying to help younger Black men get in. So, whomever you have to tell, Tuesday, July 26th, if you want to participate in this. So, if you want to know how to sign up, if you are part of the 10K project, you'll see it all in emails. If you are not part of the 10K project, you can go to the10kproject.com, click on events, and all of the events that are public, you're able to register for. Any event that is for members only, it will ask you to become a member, and then you will get the notifications with the upcoming events. And of course, everything is always in our knowledge center. So did I forget any announcements, Tawana, before we talk to Eric?
No, for anyone, we've got someone new in tonight with us. Guy is here. Guy, welcome. Anybody else who's new to the 10K project, welcome. We appreciate you guys. For anyone who's interested in becoming a member, please go to the10kproject.com. Check out our explainer video, check out our testimonials, just check out the page in general, and then keep coming back and joining us. We offer a lot of great information here for the community, both informational and executable information. We hope you lean to the latter of that, because we want you to build and grow wealth. So we want the things that we are exposing you to be used for you to do so. And we hope that you find that here when you come to visit us.
Okay. Why don't you introduce your guest, Tawana?
So Eric is with us from Net Capital. Eric, I'm gonna let Eric introduce himself, but one of the things that we do here, we talk about the Bet on Black pitch, right? I kind of not joked about it being trademarked, right? The Bet on Black pitch. But what we do is during those Bet on Black pitches, we really circle around and lift the Black founder up with love and help them raise capital for their equity crowdfunding campaigns. And these campaigns are held on FINRA approved equity crowdfunding portals. Net Capital is one of those portals. You guys know that the 10K project is portal agnostic, right? Which means we share any founder, any Black founder from all of the portals. We share them with this community. And I wanted to bring Eric on to talk about what they're doing at Net Capital. So Eric, you want to tell us what you do personally and tell us a little bit about Net Capital?
Yeah, absolutely. I want to start off by saying thank you so much for having me. It's a pleasure to be here. And I got to see you guys get the ball rolling here. The work that the 10K project has been doing in this space is pivotal. And so I'm just grateful for all the attendees who are listening in. I've been a major advocate for, kind of access to capital. I really think about it from both sides, as entrepreneurs raising capital online, and as well as people like us that can view themselves as investors, which I think is always kind of felt out of reach. And I think equity crowdfunding really allows us to address both of those issues at the same time and create real, kind of generational wealth within our communities. And so I'm really grateful for the work that you guys are doing, and really happy to be able to be on the line and talk with you all today. As you mentioned, Tawana, and so nice to see you as well, Cherie. One of the things that I love about being at Net Capital is we are one of those FINRA regulated members in terms of a transaction engine, a registered funding portal. And we work with companies, kind of across all industries from all different backgrounds. We are industry and founder agnostic, but I'm just so grateful for folks that are really kind of helping elevating the folks that have like kind of inherently been left out on this incredible wealth generation engine. So yeah, I love seeing all these beautiful names and faces on the line here. Net Capital is a member of FINRA. We're headquartered in Boston. We work with entrepreneurs around the United States and investors around the world. So I think we've worked with, about 20 so states, entrepreneurs raising with that are incorporated in about 20 or so states. We'd love to get to all 50 United States represented in our platform. We care about geographic diversity, industry diversity, founder diversity. Obviously, we just came out of June, LGBTQ plus, different orientations, all the different folks that want to be able to play in this sandbox, and we really want to welcome them all in. So you guys are a little bit familiar about the ecosystem. Net Capital as a whole, we really kind of focus on our team and our strategies, and we're really kind of trying to provide that kind of white glove service for entrepreneurs. So there is no self-service model on Net Capital. We engage with every entrepreneur we work with. If we're going to let them on, we do all the diligence and the compliance and regulatory work on your behalf. We actually acquired a law firm to be able to do that. We do the valuation services in-house, everything except for that CPA review, which we're not allowed to do. We really try to bring it as one-stop shop as possible. And then we bring all the community around you and the resources you need to be able to actually have a really strong strategy. And then we just execute on that strategy. How are we going to raise the first 10,000? How are we going to raise 100,000? How are we going to sell out that $1 million or $5 million raise? So I'm just really happy to be here. I can't wait to dig into more details, but thank you so much for having me. And thanks for the work that you're doing at the 10K project.
Well, thank you also, Eric. And I love that Net Capital is doing some white glove service, because one of the things I hear often from the founders I talk to is how confusing it all is, and how at some of the portals, they don't feel like they get the support that helps them be successful. And so I love that you guys are putting that, focus on that. And there are some portals, obviously, that are doing a good job at that as well. But it's nice to see that Net Capital is among the top that are really putting the founder first and helping them navigate it, because it's a lot, right? That we need them to be great at being founders, right? We need to figure out how to make this process as easy for them as possible so that they can keep being great, so that they can make us some money in that portfolio. So
that's absolutely right. And it is tough because fundraising is a full-time job on top of the 2 full-time jobs that being an entrepreneur is. So it is a lot of work. And, I've been fortunate enough. I loved securities regulation. I studied corporate law almost entirely in my time at the University of Michigan for law school. So I've always leaned all the way into this. Even after all of that time and practicing law at Cooley, it's still a ton of work to wrap your heads around these security regulations and understand not only just the regulatory framework, but also what the impact of that in day-to-day practice. What does that actually mean when you understand and distill the language down? What can I say? What can't I say? How do I give myself the best shot at success in fundraising? Of course, there's no silver bullet. There's no guarantees in this space, but having folks around you that come from the space, understand venture capital. I had the good pleasure of working at 3 venture funds before joining Net Capital. Having a handful of people who really understand the hand-to-hand combat that fundraising is, we've seen it show up in our success record. So we're just happy to be able to provide that guidance and really allow entrepreneurs to focus on building great products and creating value for their investors. Absolutely.
Very good. I love something you said a moment ago about Net Capital. You acquired a law firm. So some of the community members know that I've just recently got into buying businesses. And one of I was reading a book, and the book talked about when you don't have to have every skill set that you need to be a great entrepreneur. Sometimes you have to buy the skill set you don't have, not even hire someone that does it, but buy the skill set that you don't already have. And so that made me smile, because I just read this book last week, and that was one of the things they said. So go ahead, Net Capital, with your acquisition of the law firm.
Thank you so much for that. Yeah, we've been fortunate to find some really valuable assets to bring into our portfolio. We also acquired a valuation services company. Every time we talk to entrepreneurs, how do we value our assets? How do we value the company as a whole? It's a very much art and science. And fortunately, we found some really good specialists in the space, and we were able to welcome them into the Net Capital family from Value Corp. All sorts of different strategic partnerships if you can't acquire, but sometimes there's no no substitute to having them as part of the family and welcoming them in. Yeah.
I love that. Cherie, we need to buy a marketing firm. That's what 10K Project needs.
Okay. Look, I'm up for it. I'm up for it. We could buy a VC firm while we're at it.
Okay.
Yeah, work our way up. That's right.
I love that example. We definitely did acquire a marketing services firm as well. It's just critically important in the space. Absolutely. I talk to people all the time. There's some phenomenal, people do appreciate it's not always the best company wins in this space. It's not a pure meritocracy. I know talking to, kind of preaching to the choir here, right? Entrepreneurship not being a pure meritocracy, right? Surprise, surprise. But getting the word out is a critically important piece of the puzzle, especially in equity crowdfunding.
Yeah. Well, I have questions.
Go ahead, dear.
Yeah. So let's kind of take it back to just talking about investing in Black businesses and using equity crowdfunding as a vehicle for that. We don't want to assume that everyone within, who's listening today on Zoom and on our social platforms actually knows what equity crowdfunding is. So Eric, my first question to you is, if you had to explain this to your 70-year-old grandmother, what we do with this as equity crowdfunders, what would you say to her?
That's a really good question. And I think depending on the audience determines how I describe it. So 70-year-old grandmother, I've explained this to my grandmother. I'll think about how I explain this. Okay. Once upon a time, back in the 1920s, people were raising capital for the entrepreneurs, and a handful of bad actors took advantage of these exact grandmothers, swindling them out of their small fortunes that they've been able to amass over their entire lifetimes. And the federal government, the US government, stepped in and said, look, we want to protect you and make sure that you have all the information that you need before you make an investment decision. And so they did a great job creating the 33 and 34 Act, the Securities Exchange Acts, and those really protected investors. Unfortunately, it also made it very difficult for entrepreneurs to raise capital. And so a little bit of a balance on how do you prioritize early stage companies, which are the lifeblood of the American economy, and protecting these investors. And over a little over 100, I guess just short of 100 years, we've changed and modified regulation over time. And about 6 years ago, we decided we need to tailor those regulations a little bit more. And so what we did under the Jobs Act was we decided exactly all the information that grandma needs to know. And then we made platforms like ours go through the legal and regulatory work to become members of FINRA and be able to make sure that we are getting all the information, reviewing it thoughtfully, and presenting it in a way that's digestible for grandma all the way down to her granddaughter. And so we collect all the information required as a registered funding portal, and we do all the diligence, we package it in a way, and then we put it online and allow everyday people, accredited and non-accredited, and I can dig into that shortly, to review this information, and if they feel so inclined, push button invest. And so, once upon a time, the SEC really was like, hey, look, we want to protect grandma. We're just not going to let grandma in the deal at all. If you're not accredited, which means that you make $200,000 a year, or you have $1 million in assets outside of your primary residence. So if you're not an accredited investor, they said you cannot invest in this asset class. It's too risky. Startups are not for you. And then we corrected for that because they saw such incredible wealth generation from this asset class. So they said, okay, maybe we should let the retail investor, the non-accredited investor, come in the deal. But then the only way we're going to do that is if you go through an intermediary that is really heavily regulated, and if they make sure that they have all the information they need. And so that's what we do as a service, is we collect all the info and we present it so that everybody can read it at the same time, understand it, and invest in these deals online. And it's really important because wealth creation in this country largely comes from early stage companies. We've seen incredible wealth generated from all the way through the dot-com bust and beyond, early stage tech companies. And those have been reserved exclusively for the 90, it's actually about 3 to 7% of the United States that qualifies as an accredited investor. So largely already affluent, largely already white, largely already older, and largely already male. That's the type of folks that were able to get into this wealth creation opportunity. So what we've been able to do with help from regulators and help with Congress, bipartisan support through the Jobs Act, is be able to collect the information we need and present it to folks in a way that they can understand, and then allow them to invest in these assets. Still very risky. Only investors are comfortable potentially losing, but now you have a chance at investing in the next big thing and actually recouping some capital from that. That was really kind of long and drawn out. I'm not sure
that
if I
was
did
good.
it. Let's
That
get
was
into more
good.
detail.
Grandma understood it. She got it. Definitely got it. So Eric, does Net Capital have a seat at the table with the SEC? Because even though we've come a long way with the Jobs Act, there's still so much work to be done, in my opinion, around the accredited, non-accredited investor definition and criteria. What are you guys doing to help change that narrative so that more people who would consider themselves sophisticated, despite what the SEC says, right? How can they get involved? What's the SEC's thought about more people being able to have access?
I love that question. And there is Jobs Act 2.0 working its way through Congress right now. They are trying to figure out how to make some changes to make it more accessible. And we really should be grateful that they have been open to modifying these regulations. So just in March of last year, they made some pretty impactful changes. They increased the cap from $1,070,000 all the way up to $5 million, which means more companies can access the capital that they need. You know, I couldn't possibly look at you straight in the face and say $1 million isn't a lot of money. It certainly is. But for a growing company, oftentimes several millions is what's required to really make an impactful change, right? So really excited for that. Another really phenomenal change from last year in March was they changed the way that we capped non-accredited investor maximums. And so non-accredited investors are only allowed to invest certain amounts of their capital. Still, again, the SEC wants to protect the investor. That's their primary goal. And so what the original rules said, you were only able to invest, and I won't get into the specifics, but a specific percentage of the amount of your net worth and income. And it was the lesser of the two, the lesser of your net worth and income. And so what happened in that circumstance was there were people that were relatively affluent that wanted to invest in these deals that were still capped unnecessarily. So the perfect example was the retiree. And so those folks might have significant net worths because of all their hard work over their lifetimes, but they're retired and they have zero income. And those folks will be capped at that $2,200 maximum. And so they changed that to the greater of those two. And so now if you have no income, but you have some net worth, you're still able to invest more capital. And I think that was a really thoughtful change that they incorporated. So the good news is that they're listening. This is bipartisan. Entrepreneurship is really thought of as such a critically important part of our ecosystem, of the economy. And so we are adapting and making these amendments. I think the future in terms of the way that we coordinate with FINRA and SEC and try to continue to grow in this space is, making sure that we maintain the protections in place for investors, but make it easier for specific groups who don't have access to capital to be able to participate in the space already. And we are seeing some things help influence that. For example, you have to do a CPA review to be able to raise certain amounts, and you have to get audited financials to be able to get certain amounts. And we want to be thoughtful about how can we support the folks that don't have capital to begin with to be able to have at least some money to get the ball rolling. It does take money to raise money, unfortunately. But how do we get that barrier to entry low enough so that more people can participate in this space? And I think there were some pretty cool advancements proposed that might help with that as well.
Very good.
So, as you know, this is a group where we talk about investing Black and really uplifting and supporting the Black business. What are some of the things that you think needs to be done overall? Whether it's more investors, more the community getting involved in equity crowdfunding overall. If you could wave the magic wand and have an Eric Field Day, what would you like to see?
Oh, so many things. Thank you for that question. These are such great questions. Thank you, moderators. Geez. I'll start off with education. We are still, we are 6 years into this being legal. And 6 years ago, we were telling, when I was practicing at Cooley, we were advising companies not to accept non-accredited dollars at all. There really wasn't an infrastructure in place at all. And we would tell people, friends and family are not an exemption. So everybody feels like, I'm just gonna get some money from here and a little bit from there. And that honestly sometimes would jeopardize follow-on fundraisers, because what happens when a non-accredited investor gets in a deal outside of a portal like ours, they get what we call a rescission right. They can ask for that money back, and it actually taints the entire pool of capital. So everybody can ask for their money back. And that can be really dangerous for a company. And so educating people on the idea that it's easier to just say, no, don't do it. But we have to actually be more thoughtful and say, don't do it the wrong way. And that takes more doing, and it's harder. I get it. It's so much harder than just saying no. But we have to be able to say no to the wrong way, maybe to the right way. And that takes quite a bit of education. And I think we're going to be working on that for a long time. The other part too is educating the entrepreneurs themselves on the protections that really are built in already, so they feel more comfortable with this process. We're seeing bigger and better companies raise capital this way. And so we're doing away with some of the stigma, which is important. And we're doing away with some of the concerns with unruly cap tables and things. And so educating people on, maybe you learned about this 5 years ago when things weren't perfect, but a lot of portals have refined their processes to make it more tenable. And so, re-engaging and educating folks that way is important too. A couple other pieces I think we need to continue to do is help our community change our mindset about these things. A lot of our folks are comfortable with the idea of speculating. Lottery tickets. I'm in California. I'm not going to talk poorly about the California Lotto, right? All right. I don't want to get in trouble here. But I mean, we're comfortable with, some types of gambling, sports, online sports betting is becoming very comfortable, gambling, speculating, people are crypto, for sure. NFTs, we're comfortable with, and I think Tawana, I think we talked about this. We're comfortable getting on what we think is the next big thing. Yeah. But as soon as it starts becoming like institutional stocks and investing, then it feels like, I don't know if I want to support that project that way. And I think we really got to do a better job of thinking about ourselves as not just, a lot of these things are like relatively predatory, right? Gambling, lottery tickets, there's not a real good chance of a return on those options. But, and while early stage companies are risky, at least you have a shot. And so thinking about yourself as an entrepreneur and an investor is something that we need to get in our minds as well, and not just being a consumer of products. We are more than happy to buy stuff from people, but also the idea of being able to invest in the things that you're already buying, that's really powerful. And then I think one last thing, and we can move on to more questions, is I've seen this kind of a unique trend of companies having higher minimum investments. And I don't think we should continue that trend. I do not think we should continue that trend. Access to capital is important. Access to this investment opportunity, I think, is equally important. And as soon as you start seeing $1,000 plus minimums for investments, there are a lot of people entirely priced out of deals, priced out of their deals, no matter how much they like about it. And if you structure the investment correctly, $100 investors should be equally good or better than that $1,000 investor. So encourage them to invest $1,000 if they can. But I do not love seeing 4-figure and higher minimum investments, because I think it does largely exclude communities of color and low-income communities.
Yeah, and you're absolutely right. We're seeing more and more of those pop up. And I actually recently told a founder that we were not the best community for him because his minimum was too high. And he didn't like that, but this is the truth. You can come here and pay me to pitch in front of my community, but you're not going to do well because my community is not giving you $1,000. They may have $1,000 in the whole month to budget for all of the investment deals they're working on. And we teach our community to be good stewards of their investment dollars, right?
Yes.
And so I don't want them blowing it on one deal if they don't have to. So I told them, this is not the best place for you.
And I love that education that you're doing there too, because almost like any other asset class, diversification is an important part of your strategy generally. And I should take a step back and say, I mentioned my legal background. I'm not giving you legal, tax, or financial advice. Let's do the big asterisks right now, right? I don't represent you or your company. And so what we're talking about here is like general broad strokes. Your circumstances might be different, and we want to take everything with a grain of salt. But I think you're absolutely right. Diversification is critical. And that was part of the issue before the Jobs Act was, even $100,000 or even $25,000 minimums, how many people can do 10 deals at $100,000 minimums, right? So it was, even if you were fortunate enough to have $100,000, you weren't fortunate enough to be able to diversify the right way. And that could be just as dangerous as not being excluded from the table altogether. So I love seeing, we keep our minimums. We've had a lot of entrepreneurs try to encourage us to let them go onto the platform with higher minimums. And we just do not, you do not see $1,000 minimums on net capital. Is antithetical to the entire justification for the law in the first place, but definitely for the idea of being able to democratize access to capital. I think it's antithetical, high minimums.
Yeah.
In fact, we've gone the other way. That might have been an interesting extreme, but we've seen people price their minimums at the per share price, just like you would see on the NASDAQ or the New York Stock Exchanges. How much is a share? All right, I'll buy one, please. And it was, I think it was 50 cents a share. And so we had minimum investments at 50 cents. I'd much rather go all the way to that end. Yeah. And they did a $500,000 raise at minimum investments of 50 cents a share.
That's amazing.
That's pretty awesome.
That's what it should look like, I think. That's the goal.
Yeah, very, very good.
So I would be curious, again, talking about the Black community overall and some of the ways that we can leverage the Jobs Act, to know what are some of your thoughts with regards to the types of Black businesses that you are seeing and the types of businesses you would like to see leverage equity crowdfunding.
Man, this is such good stuff. I hope everybody in here is having a good time. I'm seeing some folks. We had good fun. This is the information that we need. I'm so happy to be here. Thank you. What types of Black businesses do we see, and which ones do we need to see more of? Unfortunately, still, I think we see more Black lifestyle businesses than we do see high tech or deep tech or high growth companies.
That is interesting.
So I think we still are comfortable with the idea of Black people creating anything to do with Black hair or Black clothes or shoes, or, we were like, oh yeah, they're creative. They're a creative bunch. Let them do that creative thing. Restaurants, they got good food, they have good music, right? Things that are like culturally, I think, like associated with Blackness. We're
and lower
with,
profit
generally.
margin. Yeah, they're lower profit margins, unfortunately. Yeah,
they're lower. And in an interesting way, I do like the idea. I think one of the things I've been working on at Net Capital as our head of growth is helping find lifestyle businesses to put next to our high tech, high growth stuff, because I think that's another part of diversification. You just have some companies that have a quicker trajectory to revenue generation, and then you put that right next to your moonshots. And I think that's an important part of strategy as well. But the idea that Black founders can only create lifestyle businesses is flat out false. Just flat out false. And so I'd love to see more of, and I do love seeing high tech, high growth companies led by Black founders, and they take that same creativity and all the positive things that we like about Black people creating a fashion brand or a fragrance. They put that same creative juices towards full blown high tech, high growth, and have success in that space as well. I'd like to see more of that, especially because I think having more founders create high tech, high growth helps us identify and hire more, people of color in engineering roles, all sorts of roles. And I think that's going to be important to create the next generation of entrepreneurs that then also go and hire. And that's where you start to see, I think, more of that positive cyclical change. So I think the Jobs Act can really be instrumental on is that positive cyclical change, creating entrepreneurs that then generate wealth, that then go and invest in more entrepreneurs, that then go generate wealth, and so on. So I would love to see a lot more high tech, high growth coming out of the Black community, or being supported in this ecosystem from the Black community. Unfortunately, we still do see people, for some reason or another, disbelieve their ability to create the world that they envision. And that's another thing that we got to do a good job on is, just because that person doesn't look like you doesn't mean that they're going to be any less able to create their dream, really kind of push their business forward. I think it's critical.
I'd like to piggyback off of your thought then, because a lot of people think I cannot code, therefore I cannot launch a tech company. And I'm inviting a woman on, we had to reschedule, who teaches about tech sales, selling technology. Within any tech business, you usually see three primary co-founders. The first one is your CTO, your Chief Technology Officer. That is usually the person who may not necessarily know about coding, but they know about software engineering and they can guide the coders. The second person is your Chief Operating Officer and Chief Revenue Officer. This is like, the person that makes the engine run. And the third is your Chief Sales Officer or Business Development. This is the person that actually gets cash in the bank for the company, right? So let's say that we feel like there's a deficit of talent that could be the CTO. Okay, but I know a whole lot of people that have the gift of gab and can sell, sell ice to an Eskimo. I don't have a better, sell bean pies to a Muslim, whatever. Well, what colloquialism we want to use. I think it's important for us to understand that technology is more than just coding, and that we don't have to think, oh my goodness, I don't have the talent to start a tech company because I don't know how to code. I'd love to, have you talk about that as well, Eric.
Gosh, love that so much. You're absolutely right. And there's a couple pieces there, and I want to put one more little note here because I start getting on a little tangent and I lose track of things sometimes. So let me put that down so I can come back to that.
Okay.
The first part I want to talk about is sales as a skill set. I think somehow, it's just kind of ironic. I think somehow sales didn't do a good enough job selling that convinced people that this is a worthwhile use of your time.
Absolutely.
We're constantly thinking about professional development in our company. And one of the things is, regardless of what industry what division of our company you're in, we encourage you to read a handful of sales books. Science of Selling, Never Split the Difference. These things are foundational. And regardless if you're in operations or if you're, I think some of the greatest CEOs, a perfect example, some of the greatest CEOs are sales CEOs, the archetypical sales CEO. Because at the end of the day, your job is to continue to grow the business, raise capital. You have to convey your value proposition coherently and get people to believe in that vision. That's sales. That's a full stop. That's sales. So yeah, you could definitely be a sales CEO and hire technical talent alongside you. You could definitely be, chief operating officer, but part of your job as an operator is managing expectations and managing people. That's sales. That's getting people to do what you think that they should do. That is sales. And so, I think if you think about some of the great fundraisers in history, which I think is often related to some of the best tech companies in history, Elon Musk is a better salesperson than he is anything else. An engineer.
Yeah, sure.
He is, right? He is a salesman.
Yeah. Sometimes he's hot air is my problem, but
in part, some people could argue that he could be better of being of a salesperson, so he wouldn't have to over embellish or market manipulate, arguably. But I think so. Those are incredible skills. And what's nice is you can leverage those skills to get into a company and then flourish in any capacity. You're totally right. In early stage startups and growth stage startups, there's usually an opportunity to get a salesperson on. And because they are revenue generating, that could be a great way to break into technology. If you don't have a technical background, you could probably get into these tech companies through a sales role, because oftentimes it's highly compensated on performance. And so, it's easier to justify from a company standpoint because it takes less capital to bring you on board. Engineering, that's a cost center. Every engineering dollar is just to keep the company rolling. But the salespeople, those are profit centers. That's where you can put a little bit of money and turn it into more money. And so I love that point. And then the other piece that I didn't want to lose track of is low code options are becoming ubiquitous and they're becoming better. There's a bunch of options. I don't have any dog in this race, but bubble.io is a phenomenal one. They have an academy that allows you to learn how to do low code options. You can drag and drop stuff into a fully functioning application in a way that you just never could do before. So I would definitely encourage folks to consider, if you don't have a technical co-founder, how you could use, kind of a no code or low code option to build your software company.
Yeah, I will say, as somebody, I'm just saying, for anybody who's new, I write business plans for a living for companies that are raising capital. A lot of investors are not interested in speaking to people who don't have an MVP. MVP is minimally viable product. I was speaking with a gentleman earlier today who decided against a business that he wants to do because the MVP it didn't make sense in the marketplace. Like, if you read the book Lean Startup, that's an excellent book by Eric Ries that really talks about, okay, what does it take for you to get something out in the market, working, making money, to prove that there's a market opportunity there? And then you go raise capital. And then, you kind of raise more and more if you need it and when you need it. I'd like for you to, chime in on that, or Tawana, anything else. We also have a question in here for you as well, Eric, in Zoom. So we want to make sure you get that as well.
I think you're absolutely right. And then I'd love to hear Tawana's thoughts on this as well. I think it's even more important than minimal MVP now than it used to be, because investors are generally starting to become less or more risk averse, less risk tolerant. And so if you think about all the things that make your investment less risky, having something in the market that people are using is one of the best ways to say that this is not as risky as it seems. You're already risky. You're already just, what is it? 7 out of 10 early stage companies are on their way. The natural gravity of entrepreneurship is towards failure. That's what our CEO likes to remind us every once in a while. Like that is where, and then every month that you don't fail is you pulling up on the reins away from failure. So yes, anything you could do to make yourself less risky is helpful. And the MVP is definitely one of them. We have X number of people using it actively. That makes things easier. So having a low code option so you can get it, or at the very least, there are great clickable prototypes. Is a phenomenal minimum viable product as well. So people can actually engage with it and see what that looks like even before you're pre-revenue and before users. I think you're totally right. Being able to have that MVP is critical for early stage financing as entrepreneurs start to look for later and later stage stuff, unfortunately.
Yeah, I absolutely agree. As we just talked about the investor and their available funds for investment, right? If I'm being selective with my dollar, then I want to select something or bet on something that has a good chance of succeeding. And how best to know that than for a company that already has something that they're working on, or that they're making revenue from. And I think we find even here at the 10K Project, when we have those pitches that are more in the ideation stage versus the ones who are already live, we see the difference in the impact we make on their campaign just here at this community. I mean, it's very obvious. We wake up, we do pitches every Tuesday at 8 p.m. We wake up on Wednesday morning and you can see what the community did for that campaign. And it is typically not the ones that are, I've got this great idea, right? It's the go to my website and you can see what we do, or I've got 2,000 customers already, right? It's those companies that do the best. And I'm excited.
Taraji B. Henson.
That's right. And I'm excited, when you talk about the tech companies, because we've got the next 6 weeks or so already booked for our Bet on Black pitch, and 4 of the 6 are tech companies. So
kudos to you guys. Kudos to that.
Yeah.
That's awesome.
Yeah. And I will say as well, I listen to a lot of podcasts with angel investors and venture capitalists and people who invest in early stage companies. They're in recession too.
Yes.
And when I say recession, like they're not hurting for money per se. Well, a lot of them aren't, but they are being a lot more critical with where they're putting their first investment dollars. And the ones that I'm hearing are talking about the fact that they're doubling down, meaning they're reinvesting or investing more in the successes that they have that are doing a second and third round versus putting money into like first companies that you're trying to that are trying to attract dollars. So, it's even more critical for us, and also a better opportunity for us as well to be those first dollars coming in. Now, Eric, I read a post today on LinkedIn.
When she does that, when she reshifts, when she repositions, you got to watch out. You got to watch out for that one, Eric.
I was already This is about to watch out. This is about to watch. This is Cherie. Cherie is a little crazy today, but only a smidge. So, I was on LinkedIn scrolling, and there were 2 Black VCs. One of them has a fund. The other one, I don't know what she does, but they're both in the VC world. And they were complaining about the fact that even though after George Floyd died, there were all these companies that promised to give more Black founders a chance, even though the dollars that Black founders received increased, the percentage that Black founders received did not increase. So they're going back and forth in the chat, and other people are chatting, and I basically come under the comments and I say, well, that means we need to start funding ourselves, the10kproject.com, right? And maybe you don't even agree with this, I don't know. So what are your thoughts with regards to us always believing we have to go to venture capitalists and the big banks and the big boys instead of having that power come from the ground up, you know. And obviously you have the net capital behind you, so I know that you have to be measured in your response, and that's perfectly okay. But that was the shift in my chair that I did just now.
Oh man, Cherie, wow, how much time do we have? Okay.
We have 11 minutes.
Love that. Perfect. That's plenty of time. Let me start by saying, so can I do a little bit of my background to kind of allude for why that I probably think about the way that I think about things might be helpful.
Sure.
I went to undergrad here in California. I'm born and raised in LA. And this is, it's kind of like Snoop Dogg's LA, not current LA. It was things were getting better already. It was the 90s, but it wasn't this. It wasn't, SoFi Stadium, but I'm very fortunate in that my undergraduate experience was revolved around entrepreneurship. I was able to create some medical software with my brother between undergrad and grad school, and then he went to medical school. I went to University of Michigan for law school. I did almost entirely entrepreneurship work. Worked at 3 venture funds and practiced corporate law at Cooley. The reason why I mentioned that is 2 pieces. By working with the 3 venture funds, one of them was student-led, investing University of Michigan capital into University of Michigan startups. So one of the things I loved about that was seeing people support their own communities, right? This is the university's money going into university students. Like, I think there's something really powerful there, and we could dig deeper probably on a different time. The other one was regional. It's called Invest Detroit, purely working to try to bring back Detroit, which I still am very passionate about. And then the third one was national and Mercury Fund, which was investing in deals across the United States and globally. And so it was really interesting seeing each of these pieces and their own difficulties and how it all came together. And then when I practiced at Cooley's headquarters in Palo Alto, it's really it's right across the street from Sand Hill Road. And Cooley, for those who aren't familiar, represents 2/3 of all venture funds created in the United States. 2/3. It's the biggest venture capital practice in the United States. And so I am kind of framed around venture capital. I appreciate that bias. You talked about venture capital slowing and working towards later stage. Quantified analysis has worked its way into VC that has fundamentally changed the way venture capital was being done in the 90s and the early thousands. Dot-com bubble evaporated a lot of these folks' wealth. And so they tried to figure out how to never let that happen again. And so they hired a ton of quants out of the greatest scientific universities in the world. And these quants told them late stage is the answer. Let other people take shots on goal on the early stage. You want to be first to be second, is like a joke that we used to say in Silicon Valley. Everybody wants to be first to be second, right? And that's really difficult because you need money to be able to grow the company to get to a point that you can even have a shot at these big companies. Tiger Global was the most active venture fund in the United States last year, 361 deals. They manage $120 billion, right? And they even said that they're slowing, just today, they said that they're slowing their investment through the rest of the year. And so like, even if the massive, most like well-funded venture funds are slowing their early stage investments and even their later stage investments, you got to be thinking about where are these entrepreneurs going to get that capital? And that goes back to my community piece. Only invest what you're comfortable losing. But if we can get more of us on board and spread out that risk, the profile changes dramatically. If you can get a couple thousand people, my favorite model is 1,000 people at $1,000 a piece, that gets you your $1 million. Or 10,000 people at $100 a piece gets you your $1 million that you need.
Yeah, that's our motto.
That's right. That's the piece, right?
That's Sawan and I and all of you. Yes, that's what we're doing.
That's a way that we can actually keep our entrepreneurs getting the money they need without any one entity taking an outsized burden of risk. And I think that's really, I'm obviously super biased about this, but I really do believe traditional investors, institutional players, venture capitalists, private equity, they should start being comfortable with the idea of syndicating their deals. This company needs $5 million. I'm going to put the first $1 million in. I'm going to put it on a portal like Net Capital, and we're going to syndicate the other $4 million with everyday people, right? And de-risk this investment. And so I think that's we're getting more people comfortable with that concept. And I think we're going to continue to see that. And I think it's going to be good for everybody. And then the last piece, and I won't dig too deep into this, but part of this is kind of us reaping what we've already sowed. Venture capitalists are very comfortable putting some money in because they know that they have dry powder, more money ready to put into that deal later. And so if you can invest $1 million at $10 million valuation, but you also know you have 5 million ready to put in at the next higher valuation, you can effectively turn that earlier investment into a more value investment. Because as soon as you invest at that higher value, that first million increased in value on paper already. And you can actually borrow against that difference. And so I think a lot of entrepreneurs or investors have gotten comfortable with the idea of this financial engineering. And when you have a market collapse, or we want to call it a recession or an economic downturn, when you see valuations get shaved, a lot of those shaved valuations are coming from the kind of already slightly manipulated valuations that we've been doing already. So that's just part of being thoughtful about. What we should probably be more thoughtful about is getting the money into the deal and then having them grow effectively. And that's the justification for the increased valuation, not just more money coming from the same source at a higher value.
Yeah.
That was a lot. I'm sorry. Welcome
That
to
was, but that was good.
That was perfect.
That was
Yeah.
good. One of the things I'm noticing is the conversations that I'm hearing among VCs definitely is different than it was 3 years ago when equity crowdfunding conversations are at play. They are more accepting of it than they were originally, some even raising money this way, right?
Yes.
So for themselves.
Yeah. Mm-hmm. Exactly.
So it's interesting to watch the shift. It really, really is.
And your main question was actually, what is going on with always feeling the need to get money from VC? I think one of the things we have to do is look internal and find our own value internally. Always seeking this outside stamp of approval is kind of an unhealthy relationship with the market anyways. Now, I'm not saying like there is something to be said about, raising X dollars from the right VC, especially if they're strategic and can help do certain things. I get that. And I think there's most likely always going to be a space for strategic investors, institutional players. But the idea of us, we do inherently feel like we're not validated until somebody validates us. And I think that's actually a deeper, probably more difficult conversation that we have to have as a community of validating each other, so that we don't always have to seek outside approval so we can feel validated internally. And I think with Reg CF, what we might be able to do is, grow thoughtfully, get a little bit of a user base. And if your users love you and you invite them in at a reasonable price point, they will show that love because they would like to participate. If I'm already using a product and I enjoy it, the opportunity of owning it and then getting a return if they do successfully, that's fantastic. I tell my friends and family to get in on it, and everything, and every purchase, it helps my investment when I buy their products. And so I think being able to find other ways to be validated is important. And I think there's always going to be a place for traditional venture, but we do need to disassociate venture-backed startups still fail at a lower rate, but they still fail. But we don't know if they fail less often because the venture capitalists did something, or that they were able to access a large lump sum of capital at one time. There's a big difference between strapping from one small check to another. You can't do that kind of exponential growth that VC allows you to do. When you can burn $1 million in a month, it changes the way that you can go about your entire growth strategy for your company. So it's really hard to tell. I don't think we've really seen real clear data that points to it's the VCs themselves, not the money or the access to a large pool at one time, that really makes the difference. Hard to say.
Yeah, and I mean, when VCs put in money, oftentimes they want a board seat. So you never know if sometimes, like you're saying, the strategy that they would like to see is shifting, based on them being a shareholder in it,
Yes. Yes. That's a really good point. Good point. Basically, we used to talk about finding the next big deal. I don't think that's really the case. I think we're creating the next great companies. Most of the time, I say we, the venture capital community, are creating the next best deal by virtue of having these support systems and the capital and all these other things. But would one company have done better than the other? It is really hard to say.
Yeah. Well, when 10K first started, I was, and I still believe this, I would rather see, with all the portfolio of Black companies that are out there, I would rather see all of our companies hit 25 million, 50 million, maybe 100 million, than to see unicorns hitting $1 billion. And one of the things with VCs is they want to see the unicorns, and they only want to see the unicorns. Whereas I feel like with us, if a company comes to us, they're like, look, we could hit 20 million, we could have 100, 1,000 of those that hit 20 million Then when we start talking about, okay, this brings jobs into the community, a $20
right.
million company is going to need a certain amount of staffing and support. I'm not telling people how to invest, but I'm just saying I favor like those types of companies, you know, where every once in a while you're going to get your Calendly, right? Which is great. We wish we could have been on with Calendly when, right? But it's okay for if you're thinking of baseball, it's okay for us to hit singles and knock a whole bunch of
You don't
singles
need,
out.
yeah.
Yeah, exactly. So, and I see
It's
people are saying
interesting
they're
that, you
second
know,
that.
somehow the venture capitalist world redefines success, and it doesn't balance out with what we all think success is. Because I think $20 million is pretty darn successful for a business to make. And somehow that doesn't translate the same when you talk to a VC.
Yeah, especially if they raise 200,000, you know, if they raise 200,000, they can get to 20 million. That's a huge success.
Absolutely. I think it's a really good thing to think about too. And it's because of the way that venture capital was designed. And you have to remember these VCs, some of their money, they're investing some of their own money. Most of them, to be a general partner, they have to put some of their own money in. But a lot of this is money from even wealthier folks as limited partners. And so they still have a mandate to return to these other folks. And so that impacts the way that you make your investments. And if you know that the majority of your investments are going to fail, you really do need that outsized return to justify all those other losses. But when you can be more strategic about, like you said, these modest returns, consistent modest returns are super exciting to me. It's super exciting to me. And they tend to create more millionaires, which I think we need more of. We need more millionaires. I'm happy if you have so much success that you reach $1 billion, you know, good for you. But having more millionaires that we're minting than billionaires could arguably be better for our economy. More spending, less saving, which is a leakage in the economy. So yeah, I think you're totally right. Those small investments into small successes are still so great.
Yeah, and from a political point of view, and a socioeconomic point of view, I guess is what I'll call it. If we had 100,000 Black-owned companies doing $20 million each, that's a huge political fortress there, because then you're able to have all of these companies come together in order to, you know, drive the ball forward with regards to economics and with regards to policy and, you know, and job growth. And then if one of them has a bad quarter or something like that, it's not like you've got the one company over here that has failed. Like, no, so when we look at the Asian community, for example, my mother was telling me that there's some of the Asian nail salons that are failing now, which I never thought I would hear something like that, but she was saying that they are. And I'm like, okay, so they've oversaturated the market, but still a few of them can fail. And yet, you know, they're all able to still make it. The industry itself is still there. So George is saying there's a whole micropreneur community around having a $1 million to $20 million company. I absolutely know about those. There, even Tawana is doing a micro private equity right now, which is a really big thing. Eric, we do want to make sure that Linda's question here, asking if you are hiring copywriters and marketers, Linda knows she can help.
I love that. Yeah,
I'll put you on the spot.
yeah, put us on. Let's connect. You know, generally speaking, our entrepreneurs, you know, we have a kind of a marketing team, obviously, that I mentioned that we acquired. So we do have some good folks in there, but we're always looking to bring, you know, more and great people onto our team. So our process is always saying we're happy to chat and see if we could fit you in somewhere. The other piece that's great, because we are a marketplace, is even at the net capital level, if there's not necessarily demand for that, a lot of our entrepreneurs can use some support. And we try to help them as best we can, but having some outside, you know, even one more fresh set of eyeballs really can help. So love to talk to you more, Linda, and see if you can work with net capital or even, you know, our issuers as well.
Yeah, look, hang your shingle up, Linda. And Linda, don't forget to put yourself in the expert directory.
That's right.
Linda, Tawana didn't mention that.
That's right. If you're a 10K member, We have an
Yes.
expert directory for that purpose. When the founders come to the 10K, they need skills, right?
Mhm.
And we possess those skills that they need. So one of the benefits we have for our members is you get to market yourself within our community so that the founders and other community members can seek out the services that you have. So if Linda, if you're a member, put that copywriting and marketing experience in the expert directory. And guess what? When the founders come here to pitch, they'll see you there too.
That's right. That's right. And Eric, I can't believe we are not first connect. So I just sent you,
Please.
my little connection request there as
Awesome.
well.
Yes,
I
please.
got to connect with all of my people.
Absolutely. And if I could, to that point, I just added my LinkedIn there. I would love to connect with anybody. I hope it comes across. I'm incredibly passionate about this. I feel like this is my reason to be on this earth. I'm really grateful to, I think I've found that. And so if there's any way that I can help, and not purely about fundraising, not purely about net capital, but just like resources, connections, any way that I can be helpful, I really do want to be a resource for you all. So I added that in there. Definitely connect. And to your point, there were a couple pieces you talked about. One, I think if you ask Black people, they want to support their community and they don't feel like they know how. And there's the kind of disparate resources here and there. And I think, obviously getting one national Black database of businesses like a massive undertaking, but this is an incredible piece of the puzzle, having resources like the 10K project, so you can make it easier to say, hey, I know I have a need, let me start here. And then you can expand from there. I think that's really important. So yeah, make yourself available on that. That's great. That's great. And back to the nail salon example, we've done a decent job sometimes of supporting our community in terms of like hiring and wiring, and also buying with these people, right? You identify these folks, find them, hire them, right? Like you can't talk about believing that there's all these qualified Black people if you're not hiring Black people, right? Wire, right? And invest in these businesses. We're talking about making it more accessible, so you can. I encourage folks to really, really lean into that. And then buying, right? Buying Black products. It's not gonna be easy, but that extra work is justified and it's worth it. That's the only way we're gonna keep our dollars in our community. So we've built up certain communities that have done a great job, and people have torn them down. Right, we've seen these examples. I don't want to get too preachy on this, but Tulsa is a great example. Black Wall Street, right? Whenever we start to make those types of advancements, it gets torn down, and there's a reason for that. There's a real concern about what that could look like if we become a little bit more self-sufficient.
So I do want to answer Linda's question about how she does these things. So I'm going to share my screen really quickly, Linda. If you come to the10kproject.com, you click on Become a Member, and you are able to come down to the bottom here. There's either a monthly membership or an annual membership. You're able to click Sign Up, complete the information, and you are able to join the 10K project. Then once you join, you'll enter something called our Knowledge Center. And within the Knowledge Center, we have something here called the Expert Directory. So you're able to see, I'm just going to click on Angel's information here. Angel has all of her information in here about her. And if somebody wants to connect with her, they click on the connect button, they're able to send her an email, and it'll say from the 10K project, such and such a person has a discussion, wants to have a discussion with you. And that way that person will know it's not spam, that it's like a real thing that they want to connect with you on. So you are able to come in here. I should have looked this up first somewhere. Oh, yes, you're able to put in the About Me, the tagline, your skills, and enter your information into your profile, and ultimately into the expert directory as well. So this is a member benefit. Every member has the ability to do this. So we are encouraging all of our members to add yourself to the expert directory there. So
I've got one final question from Don. He asked it earlier and I lost track of it. So Don, thank you for putting it in again. Don says, a parting question for Eric. Is it easy for corporations to become retail investors, or is it limited to individuals?
It's not. That's such a good question. I did want to come back to that too. Thank you so much for Tawana. We allow companies to invest as well. You can invest as a holding entity, like a trust as well, if you're holding your securities in trust. So that's an option as well. We've done some work and we're expanding our work and allowing you to invest directly out of your IRA and other retirement accounts. So that's pretty fun stuff, allowing you to reuse some of those pre-tax dollars. So yes, companies can invest. It does depend on the structure. You should definitely consult somebody to make sure that you hold those thoughtfully. There can be tax implications for owning certain securities. So definitely, speak with your counsel and your accountant about that. And certain entity types are not allowed to own other entity types. So I know you mentioned S Corp and C Corp. C Corp, I think, is virtually unrestricted. S Corp has some restrictions. I'm trying to remember if S Corps can't own LLCs or if LLCs can't own S Corps. I don't remember exactly, but you'll be able to really kind of quickly understand what entity types can invest in other entities. Can nonprofits invest? I think that should be okay. I don't know about that, Bernard. That's a really good question. I think nonprofits can invest, but I'm not sure. Does somebody have a?
I was actually thinking they could not.
Yeah, I think it probably depends on their mandate as well on any industries that they couldn't or could not invest in. But I do think, I think there's probably going to be an issue with receiving, because nonprofits they are able to generate and pay, but they can't distribute dividends. We've been able to raise capital for B corporations. We cannot raise capital for nonprofits, but I do think nonprofits could theoretically have an ownership stake in other corporations. That's a really good question for.
It's a good question. I think I'm gonna write that one down. I'm curious now. Thank you for that, Bernard.
Yeah, thanks, Bernard. Yeah, if you come across that,
you stumped us all.
Yeah.
Stumped us all.
That's tricky.
Okay, final.
That also might be a state-specific thing, Bernard. Sorry.
Okay. Final words then, Eric. What did you think of your first time here? Definitely won't be your last.
No, definitely not my last. I've been like I mentioned earlier, and I really cannot overstate this. As a funding portal, we are there's only so many things we could do, and one of the things we cannot do is treat our companies differently. And so, we are very objective, like criteria driven, and so being able to identify and support certain groups is difficult for us. We've been able to do some really exciting stuff. We did a virtual demo day with all Black founders during the George Floyd protests. And I know we worked, and I'm so grateful for the support that 10K Project had in helping fund those deals. And we saw hundreds of thousands of dollars flow into these entrepreneurs' coffers. And I'm so grateful for that. But we're only able to do so much as a portal, and that's by design. And so you can know that we're going to be objective. And it's so helpful to be able to have folks like the 10K Project that can be less objective and really kind of help drive momentum into these deals. So I'm just super happy to be here and talk to you all. And will not be the last, and do not hesitate to connect. Let's definitely keep this party going. It's important. If I can say one last piece, I had the good fortune of being on the team that advised Snapchat on their post-IPO cleanup work. And so when Snapchat, I'm not sure if people know this, Snapchat is actually founded in Venice. It's a Venetian company here, Venice, California, Los Angeles. And, you can't share too much about that experience, but, the return to the investors when they went public, a lot of that return went to the same Silicon Valley VCs that get the returns from other investments. And so part of what keeps me really excited about this opportunity is the idea that I can imagine a world where everyday Snapchat users in Venice and beyond got to participate in some of that upside. I think about all these community apps that get tons of value for us using their stuff. I think about the idea like Uber drivers could have been, not at the time, but could now, if Uber was recreated now, the drivers and the riders could have been able to participate in all that value creation during that time. I just think about Clubhouse. How many people are on Clubhouse hanging out and learning in? And we all love Andreessen Horowitz, and we all love A16Z, and we love the idea of a whole bunch of people getting wealthy off of good deals. But I think we got to start thinking about really encouraging companies that we love to use to let us in. And we are a powerful block. There's a reason why grassroots organizing is so effective, because there is a lot of power in the community. And so, us realizing how powerful we can be and really kind of moving in that direction and encouraging folks to let us do what we can do, I think is really powerful. So, as we grow in this space, we want to help, if you're starting a startup do whatever makes sense for your company, but consider allowing folks to come in that don't have $100,000 check to give you. Consider how impactful that is. Consider being some of that seed capital for a deal that you believe in, and think about how impactful that can be. So I really do want to, it's education and shifting our mindset. And we got to think about, really think about how when we work together, we can really make some special things happen. I saw this last question creep in. I wanted to share, what are your thoughts on investing $29,000?
Beulah says, what's your thoughts on investing $29,000 into a venture? You have a lot of, well, I think Beulah, that's a loaded question. What's the venture? Can you lose the $29,000? I mean, there's a whole lot of, I got some questions for your question, Beulah.
Also, Eric is not a financial advisor,
right. and neither is Sharia.
And he's not your lawyer. He's a lawyer. He's not your lawyer. So, I think that Beulah, that needs to be unwrapped, because there's a lot of things with your portfolio as well. So, definitely try to check out the Freeman Capital, which we hadn't talked about tonight, but that's a good lead into Freeman Capital. If you talk about investing amount of money, then having a consultation with Freeman Capital is probably going to be your best bet.
And Calvin
let's
is
talk
so
about
cool.
that for people that don't know.
Yes.
So we've got a relationship with Freeman Capital, a Black-owned firm, amazing firm, head up by Calvin Williams is their CEO and founder. And Calvin and his company work very closely with the 10K Project to offer our community financial planning, 6 months of financial planning services. And so, Beulah, that is, if you don't already have that package through us, then I would recommend that you consider it, because they may be able to walk you through that investment deal that you're considering and tell you if it's going to be a good fit for you based on your specific situations, your financial situation, your existing investment portfolio, and then also be able to give you some tips on how to break that deal down to make a good assessment for it as well. And that's probably the best way to get the answer to your question.
We don't want to tell you incorrectly. I see you have here, it's about higher education and physical therapy, but we don't want to tell you the wrong information for your portfolio. So please consider, if not Freeman Capital, someplace else where somebody can do a deep dive with you and determine if it's best for your portfolio. Also, Linda, yes, there is going to be a replay. It is currently live streamed on YouTube. So I did put the link there so you're able to go and just hear the replay once we get off. Tawana, any final words from you, my dear?
I just want to thank Eric, first of all, for coming. And then I also want to thank you and the Net Capital team for doing the demo day, because we actually got one of our most successful 10K raises was Dome Audio. And actually I saw them was on your demo day. Is where I also saw Juan from Melanins, and we actually had Juan come talk to us. And that's, I think, how one of the other ways the founders are going to be able to get success is when they're highlighted somewhere, right? With others in the community that kind of take the baton and can help them the rest of the trip get to see them as well. So we have to keep bringing amazing people in front of our communities so that other leaders in the community can take them in the rest of the way, right, on their race. And so thank you for that, because I know we were able to help Timothy and the Dome Audio team, make some good capital. They had a good capital return. And so, and we're a Melanins fan. From a company standpoint, Juan just is running an amazing company. And so, we can only do this together. That's the message in a nutshell, right? We can only do this together. And we've heard all the taglines, we're better together. And, and it's true. We just have to start believing it, and we have to act upon it, right? And so, here at the 10K Project, we're doing our small part to make a small impact on these founders and in their lives so that they can do great things. And the money that we're helping them raise is going to do great things. These are amazing companies with good services and solid products, and they just need us to give them a little support. These campaigns, as we've heard, as little as $100, right? And we know many of us have blown $100 on less important things that will give absolutely zero return, right? And so, just consider being a help to these campaigns. And maybe, right? Maybe, no promises, no guarantees, but maybe there's a return for you as well, right? Because it is an investment, and that's an option. But they need our help. They absolutely need our help. So tomorrow's Bet on Black pitch, 8 p.m. Eastern Standard Time, right here. If you're already a member, you got the link. If you're not a member yet, you join and be a member. If you do it, typically Cherie lets you do it. If you join by tomorrow at 4 p.m., she'll capture your information and get you the invite out so that you can attend tomorrow's pitch. If you do it after 4 p.m., you can still get the pitch. You just can't get it tomorrow. You can get it later.
Unless you email me and I happen to see it.
An amazing company tomorrow. It's a tech company. And I always give a little teaser. So tomorrow's company, a group of sisters, so I'm going to say that, and not just sisters, but sisters, right? So sisters, and the company in a supply chain shortage, this company works wonders. That's what I'm gonna leave it right there. I'm gonna leave it right there. You got to come to see who they are tomorrow. You got to come and check them out, come and support them. But you guys know we typically, and this is not by design, right? Because I'm an entire Black woman, but typically we have Bet on Black pitches filled with men. I don't know why there are more men equity crowdfunding. I don't have a clue why, but that's the reality. So I'm always excited when I find amazing Black women solving problems. And tomorrow we've got 4 of them that are going to be in front of us telling us how they took a problem and they fixed it and they solved it. So I'm super excited about tomorrow.
Yeah. So Bernard Doan was on Net Capital, where Eric is from. So Beulah, you shouldn't have to do anything before 4 o'clock. You're already a member, my dear. I believe you're already a member. Yes, I think so.
Oh yeah, Beulah, you're a member already.
You're a member. So yeah.
Beulah, if you're not a member already, you should be, because you come to every session.
Yeah, so yes. I'm fairly certain. So yes. So
yeah, Dome actually was on Net Capital, and then they moved over to Pick Me. Yes, yeah. They're not. Their campaign is closed now. They're not active anymore.
Yeah, their campaign is closed. Okay, everybody. Good evening. Enjoy yourself.
Thank you, Eric.
Come back tomorrow, 6 p.m. if you want a tech job or you're tech curious, and then 8 p.m. of course for the Bet on Black pitch. Thank you, Eric. Take care.